Yahoo Finance's Jared Blickery joins us from the floor of the New York Stock Exchange. Jared, all right, help us break down the significance of this milestone. Should we hit it at 4 o'clock today?
Well, I'll tell you what, with a sample size of 0 now, or I'm actually going to correct that in a second, I'm not going to get too excited about it because anything that small doesn't really have any kind of predictive power. If anything, it says the market might be a little overstretched right now, but I did do some research where I showed earlier in the week, not going to repeat it, that strength tends to beget strength. So if you have these big streaks like 10, 12, even 15 days, you might have a short-term pullback, but in the long run, tends to be up 6 months, a year from now. With respect to 14 days, now there was an instance, I found somebody else on Twitter, Charlie Bileo, and he was able to find a 14 streak back in 1897. Something a little bit different back then was they had Saturday trading, so that adds a little wrinkle. That was in place until 1952. So unless you have really good data sources that include that Saturday trading, you're probably going to miss it. I checked mine, I don't have it, so I'm going to have to take their word for it. My streak days before 1952 probably over right now. Let me move on and let's tackle the Wi-Fi Interactive because I just want to show you some seasonality with respect to Fed Day. First of all, note that all the indices on the left, except for the Toronto Exchange, in the green. And here we have seasonality around these FOMC days. This goes all the way back to 2018, and that's when Powell became chair of the FOMC. And I've divided the time periods into pre-Fed Day gaps, so that's already passed. Fed Day, that's yesterday till 2 p.m. That's right here. When they start getting red, that's yesterday, 2 p.m. until the close. And we didn't see much happen yesterday. We did get a mixed market, I believe. But the real downer has been post-Fed Day. Although it's ticked up this year on a few different days, net, that has been the worst time to be long in the market. So just throwing that out there, I think that's a mild seasonality play. I do want to get into the market breadth because the concentration argument continues to get kind of destroyed the way we're looking at it in the market. Let me take a look at a 1-month view of the sector action. We can see energy, financials, communication services, and real estate are all outperforming. That's a pretty healthy mix, but skewed to the value and the cyclical side. And then you take a look at the leaders, might be surprised to see that over the last month, regional banks are my #1 leader, followed by meme stocks. Then you got ARK, and then you got IPOs. All the way at the bottom, the only thing in red is crypto. So whatever linkage crypto had with the Fed and with stocks and risk markets in general seems to be broken right now. But the bottom line is this rally continues to gather steam and continues to gather breadth. And so it's difficult to come up with bearish arguments until price convinces us otherwise. And that's what price has to do.
Well, we'll see if it does. All right, thanks so much, Jared. Appreciate all of that important context.